Hey guys, welcome to Market Mondays. Hope you guys had a great weekend. I'm going to talk about today. We're going to go into the two inflation reports that came out last week and what's expected to happen this week that could be a huge rate mover. So before we get right into it, I'm going to do a quick dad joke for you guys. Dad joke is my nephews, when they were young, they used to chew on electrical cords. So what we had to do to get them from stop doing that is that we had to ground them, and currently they are conducting themselves better. Pew, pew. All right, so getting right into it. Last week we had two inflation reports: consumer price index and producer price index. Those two things showed that for their individual reports on inflation showed that in both of those inflation reports that inflation came down, which is a really good sign. And on those days that inflation came down, mortgage rates got better those days. Something weird happened on Thursday, and then Friday it bounced back. So essentially on a week-to-week basis, for the most part, rates effectively remain the same. There wasn't really much change in the week-to-week, but on the day-to-day throughout the entire last week was kind of a bit of a roller coaster, but we still ended on a good note. However, this week is going to be an interesting week because the Fed is meeting up called the Jackson Hole Symposium. And what's going to be really important about that is the Fed meetings that come out of that meeting on Wednesday, most likely. This will determine how they intend on approaching the Fed cut in September, or they might do it sooner. I mean, there's a really low chance. I don't think they have the indications they need quite yet, but there's a chance they might lower the Fed funds rate this month. There's a stronger chance that they may lower the Fed funds rate starting in September. So we'll see. Those Fed minutes come out on Wednesday, and that will have a big impact on rates. Same as on Thursday, the report that comes out is the initial jobless claims. This is the initial jobless claims where people file for unemployment benefits for the first time. That's a really big deal because if the job market continues to show cooling off and inflation continues to go down, those two things are the one reason our rates are going to be the biggest influence on mortgage rates at this moment. So those two, Wednesday and Thursday more so, I think is going to have a big impact. Now, when it comes to the Fed cut, again, we don't know if they're actually going to do it in September, in the September 17th and 18th meeting, but it is a really important thing to note that that's probably what's going to happen. There's a very low chance they're gonna lower the Fed funds rate. But the other thing is that a lot of the Fed board members did not believe that the unemployment rate would go above 4%, and now we're at 4.3. So there might be a vote where they might lower the Fed funds rate a lot sooner than expected, maybe a month sooner. So we'll see. That's going to be a big impact again this week. So to give you guys an idea of how rates are trending right now, a lot of you guys who are on my email newsletter, usually I have this chart in the email, but why I haven't been doing it is because it was not being updated since like June 25th. So they've recently updated it, and now we're good to see kind of how numbers have been. And it's been really exciting. If you guys can kind of see this gigantic dip right here, that's a huge dip, guys. We've been seeing, consistently above sevens for a long time. We had moments where, got down to the below sevens, but for the most part, we've been averaging about sevens and 7.5s, between 7 and 8 for basically the last year. Now we're seeing, 7 and below, which is again very exciting. So again, for this specific parameter in Washington State at a 720 credit score at a $500,000 purchase, we are seeing improvements in rates. So that's a really good sign, and I'm really excited to see how these numbers to continue to improve. So you guys will see these numbers, but again, if you guys want to look at these numbers yourselves, all you have to do is type in current average mortgage rate in the Google search bar and kind of see how rates are trending. So really excited to see how the numbers are right now. There's a lot of my clients that are refinancing right now or starting the process and getting the file set up so that we can lock in when rates get to a reasonable or get into their range. I just had a client that went from 7.1 to 5.75. So they're saving almost $500 a month and 2 mortgage payments. It's pretty exciting. That's like $6,400 between 2 mortgage payments and an extra $500 a month. So really exciting news and for that client. And I have a few clients that are going to be lined up in the same position. So again, if you have clients that you've closed from January of this year and before, if they close January this year or before, they are in a position to look into refinancing. So this is your chance as a real estate professional to get in touch with those agents, in touch with those clients, and you might find yourself getting some new listing clients. So that might be really exciting, and you can kind of get that business set up for future monies, and continue to move the needle as best you can. Otherwise, that's all I got for you guys. Hopefully you guys have a great week, and I will talk to you guys soon. Nuke out.